is a real treat for all of us. William Genovese is going to join us directly from Shenzhen, China, where he lives, and talk about the next generation digital financial services, accelerating the journey to digital maturity. So William, go ahead and turn on your camera so that the audience can see you, and I will give a brief bio on William. William is the Vice President of Corporate Strategy, Global Banking and Financial Markets at Huwei Technologies, based in Shenzhen, China. William's responsibilities include the further development of Huwei's financial service industry strategy, with research and formulation of new solutions encompassing technology and business architectures, emerging technologies centered on AI analytics, blockchain, quantum computing technologies, mobile and digital and IoT, and evolving business models in the Fintech and RegTech era across the financial services sector. William is also a CTO and Executive Board Director for Saving Promise, as well as Standard Health. He's a committee co-chairman, advisor, board member, and for a number of other companies and industry associations, such as HAKU Global, the Fintech Association of Hong Kong, Fintech for Good, Findexable, NYVX, and the Lifeboat Foundation. William, it's a real treat to have you join us. Thank you for sharing your expertise with this global audience today. William, right now you're muted, so make sure that you're unmuted so that we can hear your audio.
Yep. Can everybody hear me okay? Good.
Sounds good. Thank you very much.
Okay. All right, so welcome everybody, and for the next 35 minutes, I'm going to be talking about really what I've coined with our company, Huwei Technologies, next generation digital financial services, and that's an important opening point, because really, we in these times especially, we can only really focus on the immediate road ahead in terms of how things are changing. Or we're backstepping, for example, in the crisis we're facing now. So it's really the next generation, our children, and what's the forecast look like in terms of next generation digital financial services versus traditional. So that's what I'm going to talk to you about, and then how that's going to, from our point of view and our solutions, accelerate the journey to digital maturity. Okay, and everybody talks about digital transformation, and you'll hear a lot about that over the next 3 days or so. But what does it mean to really become digitally mature, and you know, what is that made up of in terms of metrics or KPIs? Okay, and that's why I kind of focus on next generation. So the scope or horizon is really in the next generation of our children's lives. So Jose did a great job of kind of introducing me. I'm not going to spend too much time on this. Most of my career, I've been with Huawei for 4 years now in Shenzhen, China. I am from the US. Good 45% of my career has been outside the US and Europe a number of times, a couple of times now in Asia, spanning about 7 years. Ex-IBM, over 10 years with IBM, ex-KPMG, another 7 or 8. And then I've also worked for a blockchain company as a CIO and CTO. Wachovia Bank, which is now Wells Fargo, and then I started my career in Coldwell Banker, which is a big real estate firm internationally. Okay, so in my presentation here, I really kind of segmented it into 4 sections. So at the highest level, across all industry verticals, what do we see? What does Huawei see in terms of the game-changing technologies that will be in play, along with new business models, and what's enabling those new business models for all digital enterprises? I'll kind of go into some key industry trends and observations, shifting gears specifically to financial services, which is the context, as we know, of this conference, and then how IT is being reshaped by what I'm calling digital accelerators. What is the basket of digital technologies that are being applied in financial services to accelerate digital transformation and getting to that holy grail, as it's loosely defined in many cases and hyped, of digital maturity? Now, our mission statement is really at the highest level, okay, for our company globally: bring digital to every person, home, and organization for a fully connected, intelligent world. Okay, but for financial services, it's specifically centered on financial inclusion, okay, and intelligent connectivity. So we work in a lot of emerging markets: Africa, Middle East, Southeast Asia, far reaches of China, India, and the mobile device is the access point for financial services for many individuals who don't have access to traditional financial services. So 5G is going to play a very, very important role in that, as is artificial intelligence, to allowing access to financial services for many individuals. Now, an intelligent world is definitely arriving fast, and I mentioned 5G and AI, and these are going to be the two center points in terms of game-changing tech that's going to fuel eventually new business models. Okay, so we'll be seeing more data and ingesting more data through super sight. Okay, AR and VR. We'll have tailored streets. Okay, through traffic optimization, connected vehicles, C2V. Zero search capability, okay, without using buttons and voice. We can use voice commands and other biometrics to potentially enact searches, and augmented creativity in terms of AI. Now, if you kind of look at it in terms of the three dimensions, okay, in terms of digital transformation, we view it in terms of digitalization, connectivity or connection, okay, itself, which is really centered on 5G, more bandwidth and latency, okay, to use video and streaming and a lot of other capabilities that will be needed, where 5G will be needed, and then even beyond that, 6G. And then intelligence. And then what this chart is showing here is, through 2025, grouped in these segments across all industry verticals, and that's a key point, including financial services. What are some of the metrics for digitalization, connection, and intelligence, okay, and how things are going to exponentially grow, okay? Most of what you're seeing here will be embedded or ubiquitous, okay? So based on financial services business strategy and how it kind of permeates into other industry verticals, okay, and lifestyles of consumers, then financial services becomes more ubiquitous and embedded, okay, through what you're seeing here and these dimensions and the metrics, therefore. Now, if you kind of look at this and kind of dive down further into financial services overall, what you see on the left side and the right side is a mapping of traditional financial services functions. Okay, some of these are specific to trading, as example, but many of them are cross-segment related. So enterprise risk management, CRM, or client risk or relationship management, reference data, reconciliations. But what you're seeing here, the takeaway is that not one individual technology or quote unquote digital accelerator will solve everything or even solve one function, okay? And to a large degree, as technologists, we're repeating some of the mistakes in the past in terms of research and application, in the sense that we pour a lot of effort into individual technologies, but we're not looking at how they overlap or converge to accelerate digital transformation and maturity. And that's exactly what this chart is showing. It's showing an overlap or a convergence to solve problems that we have with traditional technologies, or where we need to move ahead exponentially. Okay, so that's the key point here. Blockchain's a very good example. We've been focused on it as a world for over 10 years. It has not reached full enterprise adoption from digital acceleration yet. There's been a lot of progress, but if you look at smart contracts, that's overlaying with artificial intelligence. IoT will come into the picture, as well as big data and advanced analytics. Some key industry trends and observations. I kind of like to start at least somewhat in the beginning of the presentation. These are some quotes. Charles Darwin, you're all familiar with that one, I'm sure. It's not the strongest of the species that survives, but the one that's most intelligent, nor the most intelligent, but one that is most responsive to change. One of my favorites is by Peter Drucker, okay, and Culture Eats Strategy for Breakfast. However, my living, working, and experiencing cultures all over the world, including China, in very, very dynamic times right now, I would say that if culture is eating strategy for breakfast and you're not addressing culture in your strategy, then you really don't have one. Okay, so it's very, very important that your strategy addresses culture holistically. Okay, so you're not just covering breakfast per se, and you're covering all meals in terms of your strategy that you're laying down and executing. Other key things too that are kind of highlighted in yellow, these are more or less some of my quotes, except for the last one there. But I would say, and I've seen this many times, that if you believe your choice in infrastructure is a commodity, and it really doesn't matter who you go with, either whether it's infrastructure, data center, or cloud provider, then you've got to view your business running as a commodity too, because it does matter. Okay, there is differences in how open, how scalable, how secure your infrastructure is. Banks can't innovate if they keep legacy systems alive. Well, we know that. Okay, and that gets back to the previous point. How open is your infrastructure to integrate to legacy infrastructure? Okay, so do you have open cloud, Openstack, okay, open APIs, things of that nature? And your goal as a bank or a financial services provider is to be the best at fintegration. You want to integrate within your own four walls across all hardware platforms and software platforms, but also externally to e-commerce, to retail, where financial services will become embedded and ubiquitous. So if we kind of look at the evolution of banking, picking on one segment per se, and this is probably the segment that gets picked on the most in financial services, we've moved from informal banking many, many hundreds of years ago to in the next generation, or certainly in the next 5, 10, 15 years, to embedded banking and financial services as a utility that's autonomously being driven based on lifestyle choices. Okay, so if you look backwards, in formal banking, to a large respect, we've kind of revisited that with cryptocurrency, nascent currency and trading systems, under the mattress savings. Well, we use Bitcoin now. That's kind of skirting outside the traditional financial system and is decentralized. Okay, but the point is, prior to that, the industry's kind of shaped itself as a product, loans, mortgages, payments, okay, to more of a service in terms of omni-channel. Okay, so consuming any service that an institution for financial services offers through your ATM, going into the branch, your internet browser, or your phone. But really, to get to ubiquitous banking, we're introducing a new term or thinking, which is multi-channel. And the difference there is multi-channel is cutting across industry verticals and platforms. Okay, so Amazon, Google, moving into financial services. Okay, and the utility itself is banking and financial services. So it's not so much you go to the institution anymore, you're consuming financial services through many other multi-channel aspects or access points. Okay. And what's fueling that is really a change in our behavior and our expectations, okay, fueled by technology, the internet. Okay, the internet and mobile devices has kind of changed our behavior in terms of what we can do and what we expect. So in the past, you went into that one building or that one house to take out a loan or put money in the bank with a passbook. Okay, you needed to get a new car, what have you, or a mortgage. Now you're moving across industry verticals, okay, and it's all powered by APIs, so it's seamless. You don't necessarily need to go into a traditional financial institution to perform a financial services function. Okay, so there is a shift in banking to accommodate our expectations and our digital journeys. Now, when we talk about digital financial services, what are we really talking about here? Okay, it's really grouped into three main areas in terms of consumption or expectations. Payments, number one. We need to pay for things. We need to pay for goods and services, food. We need to pay our bills, okay? And now we expect to do that from the palm of our hand, okay? Mobile devices. We're cooped up. We're in quarantine. We're in lockdown. We need to buy and order food. We need to pay our bills. and we do it from either an internet browser or our mobile device. Okay, we need to send money to people and family and loved ones in trouble in other countries, so we do that digitally through digital remittances. Once again, if we can, through our mobile device, mobile financial services. If we don't have enough money to pay our bills, we're in a bind, we've lost our jobs, credit and lending. You don't want to jump in your car in these times and go down to the bank branch and then wait 7 days or even 3 days for an answer on a loan. You may need a microfinance loan, very, very short-term loan and a smaller amount. So ideally, you want to do that from your device. So digital credit and lending, okay, especially for small to mid-size enterprises, okay, the PPP program in the United States for COVID-19. Okay, so all of this should be able to be enacted through the mobile device very, very quickly. And the last overall grouping, which is insurance, investments, wealth management, and savings and deposits, is financial asset protection. Probably the last bastion, okay, in terms of disruption in the traditional industry, but consumer tech, e-commerce is moving into this last era as well, okay, in terms of financial asset protection, and they're offering insurance, very, very quick onboarding and policy administration and claims processing. They're offering robo-advisory for wealth management, and now Google is offering a debit card, okay, so the back end may be a traditional bank that you're all accustomed to, but in terms of the servicing of the accounts, okay, some of the other players from outside the industry are moving in. So it's meeting those three core buckets of needs: to pay, to borrow, and to store or protect your assets. That's moving into the digital realm that's becoming more ubiquitous. Now, the business models of the future, oh, excuse me one second. Just move that, okay, are really broken down into 4 categories in terms of characteristics. They're customer-centric, operationally excellent and touchless, real-time decision support, highly adaptive, obviously globally networked. So these are not islands or walled gardens, okay? They have to have global reach, okay? So there are systems in China, there's some in the West and the US, but at the end of the day, they cannot be walled off, okay, for business models of the future for the next century. They have to be open and reach globally, okay? And then obviously they're agile and rapidly innovative as well, okay? So it's really those 4 areas in terms of characteristics where things are going to change. So it's less vertical if you look at it from that perspective, and it's more horizontal, okay, in terms of capabilities. Okay, what's going on here? Okay, there we go. So if we look at the disruption in the industry, you know, you've heard the term Fintech, big tech, which are the e-commerce players or platforms, and then there's tech fin as well to some degree, where some of the e-commerce are moving more into offering technology services to support next generation digital for finance, okay? But the point here is really the in emerging markets and developed markets, okay, the banks are the traditional providers in terms of return on equity and engagement with customers are focused on core strategy around core transactions that have lagged a bit further behind in terms of being disrupted. So this is commercial and transaction banking, okay, investment banking to a certain extent, and mortgage, okay. However, what's kind of left the gate, okay, and where the disruptors are coming in, big techs and fintechs, and now it's $2.4 trillion in revenue. 45% of the global revenue pool is in the shaded area that you're seeing. So obviously, payments has left the barn. The horse has escaped. It's no longer owned by the industry. Okay, we all know that. Consumer finance, okay, is quickly on its heels, okay, in both emerging markets and developed markets. And then slowly coming up behind is wealth management in the context of robo-advisors or augmented robo-advisors with traditional wealth management advisors, okay? And a lot of the innovation, 70% is spent from fintechs on innovation, where 35% is only spent from the traditional incumbents. So that's how they're penetrating in both developed markets and emerging markets and disrupting the traditional industry thus far. Where are they doing it and how are they doing it? Well, if you look at this is a great chart, source PwC, and I like this chart quite a bit. If you look at this in terms of a tree that's been cut down or concentric rings, and you go very, very much to the center from networks, core infrastructure, and core systems all the way out to the periphery, which is more consumer-oriented finance, you'll see, the core capabilities, the key capabilities, and what's being changed, okay, from the network perspective. Okay, so the biggest provider there has always been Swift. Okay, now that's being disrupted by Ripple as an example. And then you have examples for infrastructure and core banking systems, transformation functions in terms of regulatory compliance and reg tech. Okay, so that's not always now in-house. Okay, there's a lot of cloud-based SaaS services that do regulatory compliance for know your customer, to share customer information if a customer has a financial account at multiple institutions, and anti-money laundering as an example. The next key grouping though is really 4, 5, and 6, okay, which is around integration, and then based on your business strategy and your monetization scheme, are you providing other institutions, e-commerce, retail, what have you, your APIs to your core products so they can consume them and get customer data, and you enrich that and offer better products tailored to customer experience? Or are you more inbound and you're integrating external big data, you're integrating APIs, okay? Or are you aggregating? So you could be doing some advertising, i.e. like AKA Facebook, okay? You could have freemium, you can have licenses, you could have referrals. So 4, 5, and 6 are key areas in terms of open platforms and transformation for the institution and where it's being disrupted. And then on the outside, like I mentioned, you have, in certain segments of financial services, payments, I mentioned them earlier, credit lending, and then wealth management, you have individual services that are starting to get disrupted on the periphery based on consumption. The shift in the industry is really coming at 2 angles to the traditional bank or the provider. It's coming from the GAFAs, the big platform companies on the left, and then you have on the right, you have the fintechs that are going after specific functions, payments, wealth management, but not typically holistically. If it's a fintech, are they going after more than 1 or maybe 2 functions? Okay, and you can see they're coming in through the roof, which is mobile apps, payments, the internet, wearables, okay, to get further into the traditional ownership of the institution of financial services. And the holy grail is really going to be on converged data on the bottom, the digital platform, in terms of data and analytics. So you're able to share your data as a traditional financial institution and not so much look at this as a competitive picture, but integration both to non-bank entrants on the left in terms of the big platforms, and then selectively where you have gaps as an institution to specific fintechs on the right. If you look at this, a lot of surveys out there, a lot of research. The financial brand has put out some good documents in terms of research. Consumers in the industry feel that by 2022, the leading business models for financial services will not be the banks. It'll be digital e-commerce platforms, followed by consumer tech, fintech startups. PayPal is still considered a fintech. It's the most well-known fintech in the world, okay? And now it's moved into credit and lending. So it's not just payments. And then you have challenger virtual internet banks, which are the standalone startup banks that are internet only, no branches. Players from other industries. Ping An here in China started as insurance, and now they're into healthcare and banking. Orange Bank or telco banks that start as telcos and they move into banking, especially in emerging markets. Orange is moving into Africa now, offering a bank in Africa. And then you have incumbent banks that either launched their own digital bank as a subsidiary, Standard Chartered with Mox, as an example in Hong Kong, part of the virtual banking licenses here in this region, or you have the incumbents, and some of them are doing a pretty good job of improving their digital services to keep pace. So Citi, HSBC, China Merchants Bank are moving away more from a traditional provider to becoming really a digital bank, okay, to keep pace with some of the others. But you see the shift, okay? We're all working on the digital e-commerce platforms. We're working with consumer tech companies, internet companies, our mobile providers, and that's where our attention is going for financial services, more so away from the traditional providers. So the starting point for differentiation is how you get table stakes in the game. Well, it very much depends on your geography and your banking model or your financial services model. Are you targeted to consumers or small businesses, small medium enterprises, mom and pop shops, or mid-tier companies, or are you institutional, mid to large corporation? But at the end of the day, okay, the starting point is enabling secure data exchange, okay, outside your four walls with other platforms. So you must have open infrastructure, you must have open platforms securely through APIs so that you can grow table stakes and grow your strategy for further growth and fend off disruption. And that's the key point on this chart based on the initiatives and how far you'll go in terms of your strategy. So now we kind of move into, a little bit of specifics around Huwei and what we're doing. Okay, so if you look at the accelerators in digital financial technology, okay, it's really based on 5 buckets. 3 of them are pretty much supporting embedded ubiquitous financial services using AI, digital and mobile experience, okay, and open APIs, which I've mentioned a number of times. Underneath the covers, okay, in terms of further security and protection, our perspective is adaptive security with biometrics, facial recognition, and blockchain. We offer blockchain in our cloud-based service, but we're not specializing in developing specific applications for the industry. We are putting in blockchain to support transaction integrity and trust from the endpoint or the device through networks and into the clouds and infrastructure for transaction protection. So it's really those 3 that are on the left side that are more focused in terms of industry digital acceleration, and then the other 2 are needed for security and resiliency and stability. Now, if you look at that same context applied a little bit broader, okay, to the models that I mentioned earlier, okay, these 6 models or 7 models, 6 A and B for the incumbents, you'll see that kind of plays out. So this is from a number of research points that I've looked at over the last couple of years, and which model is using what digital accelerator and how, okay, and how much in terms of their services, high, medium, and low. Okay, and what really jumps off the page is artificial intelligence, analytics, and cloud computing, which kind of makes sense, at least from a high to medium perspective. And the dynamic is shifting in financial services with banks and other segments becoming more and more comfortable with cloud computing. So very, very interesting that the usage of what types of technology and how it's applied is fairly universal, okay, across these 6 models. Okay, so that's telling everybody that the new players that are coming into this industry are using AI and analytics for customer experience, gleaned from payments information, credit and lending next, to move further into this industry and penetrate it. Okay. And then the incumbents are catching up to that a little bit slower. Okay, if you look at kind of the comparison of fintech business models, okay, so some of them start out helping traditional providers in terms of developing capabilities. They move into business incubators or accelerators. On the right side, which is more of an external focus, they could spun off separate digital banks through the help with fintechs. They could have joint partnerships and offer new products. What's really proactive or innovative, some of the banks, Standard Chartered Ventures, Citi Ventures, they go into VC and private equity, okay, and invest in fintech portfolios. Or in a certain market, some giants, okay, that compete against each other very vigorously. For example, in mortgages, they may cross-sell each other's products on one platform. So to fend off disruption and to stop competing against each other for, very low amounts of market penetration and expansion against each other, they join forces on one platform and cross-sell mortgages. So that's pretty cool. I mean, and that's very innovative. And that's something that's kind of new, that's been kind of popping up, that's using fintech to kind of more of an external focus versus internal capability building. In China, the picture is a little bit different. China, in my observation, 4 years being here, anything that's financial technology oriented is sometimes thrown in the fintech bucket, or certainly TechFin. Okay, so many of the banks in China are partnering with the teletech or telecom providers such as ourselves, China Unicom, China Mobile, or the internet companies, okay, and Ant Financial and Tencent, okay, and some of the e-commerce giants. So there's less individual partnering with individual fintech startups versus telecom, consumer tech, and e-commerce to move things forward in terms of digital maturity. So a little bit of a different dynamic I wanted to share with you versus some of the banks in the West. And then our strategy, kind of pulling this together in a pyramid, or what I call the power of three, back to payments, 1, credit and lending, 2, and then asset protection, 3. We see the penetration in our portfolio horizontally through mobile and digital financial services first, everything from the palm of your hand. But that doesn't work if you don't have open platforms and open infrastructure to connect with IoT and other solutions, blockchain, that are under the hood. And then what enables that in terms of the plumbing or the glue is artificial intelligence. We have an AI system on a chip that we've built, okay, and that's from the edge in our networks and into our clouds to support the triumvirate of financial services digitally, whether it's on an e-commerce platform, a telco, or a lifestyle platform like Facebook. So not just traditional bank. I mentioned some of these earlier in the pyramid, as well as that financial accelerator picture, okay, what we're focusing on, what we have in our portfolio. Okay, and the top of the pyramid, once again, is mobile-centric IT architectures. We feel that this is going to be the battleground, certainly in the next, 3 to 5 years, until the mobile device, the smartphone, is supplanted by having the capability on any interface to be consumed. But that's really a 6G play, probably. Okay, and that'll come a bit further towards the end of the decade, perhaps, or a bit further beyond that. But the battleground right now, super apps in China that you're seeing, WeChat super app system, and other geographies are picking this up. It's all through the smartphone, so that's kind of where we're focusing. Okay, we don't do it all. Okay, so we certainly are playing in the resource layer, infrastructure as a service. General platform as a service, which is a layer above infrastructure as a service, containers, API gateways. We have a full stack artificial intelligence platform, Hadoop and big data, massive parallel processing databases, and then application paths. We start to move in to partnerships and banking as a service. Okay, wallets. We do have a mobile money wallet that we run through our carrier division, and that is M-Pesa. We built M-Pesa for Safaricom with Vodafone going on almost 8 years ago. So we're slowly moving up the stack in terms of capabilities, but you can see based on the color code, white, orange, and green, where we're partnering, and then where it's specifically partner, which is really the traditional financial services products. Okay. And once again, like I said earlier, you need an open platform. Okay, so and it's important to have that to tie your mobile device in terms of ubiquitous financial services for payments, credit, lending, and deposits and asset protection across multiple service scenarios and platforms, okay? So external microservices to healthcare, parking, public transport, okay? And that's got to integrate to partner apps and mobile apps as well. So open platforms is key here, okay? Talking very quickly on our AI solution. So it is from, regardless of where the source is and the type of diverse data, okay? And we have a lot of power through our AI system on a chip in the device at the edge, big data Hadoop platform, massive parallel scaling databases that we offer, and then outputs can support a number of scenarios on the right side. Okay, and then if you look at this from a cloud architecture perspective, we support the traditional architecture, the new digital core through containers, and then ecosystem through outside the traditional industry to e-commerce, retail, government as well. So that's our #1 industry sector, is government public sector too, through private, hybrid, and public cloud deployments, because we're all Openstack. So we offer ways to integrate to traditional infrastructure. So banks, a lot of the big ones have IBM mainframes, X-Space systems, x86 and Unix. Okay, a lot of vertical silos. And then through Openstack, we're able to kind of open that up and work across multiple hypervisors and integrate to all of those backends. Okay, very quickly on our AI stack, same point. We integrate to TensorFlow, PyTorch, Paddle by Baidu. So our CAN architecture, okay, for neural networks integrates across the board, and we offer 3 different lines of chips, our Ascend line for artificial intelligence. Blockchain is based on Hyperledger. It's running in our public cloud in China and will soon follow outside China to other countries as we roll public cloud out further. And we support a number of cross-industry use cases with Hyperledger right now. And we're also partners with R3 for financial services. And then finally, our engagement model, we work 2 ways. So we work in engaging with customers from the product perspective, if you're having infrastructure issues, to move into cloud choices, which we offer different deployment models to build out digital services. However, I like to spin this the other way and work with customers in the sense, what are the digital services you want to grow in the next 3, 5, 10 years? What are your cloud choices in terms of what you're working with, okay, whether it's single cloud provider or multi, and then look at your infrastructure choice that's supporting those decisions for your cloud architecture as well as your digital services you're building. Okay, so it goes from service level to architecture to product choice. And that's all I have right now. Thank you for listening, and we can open it up to any questions.
William, that's terrific. What a comprehensive view of what's going on in the marketplace and the fast pace of technological development. I will ask you to stop sharing your presentation at this time so that the audience can see you and I on their screen. And while you're doing that, I am going to, I'm looking at the many questions that have come in, and I'll start with one that, yeah, William, just go into the Go to Webinar interface and then click the Stop button under the Sharing tab.
Okay.
Got it. You got it. Thank you. So, William, one of the things that you talked about is that, which is a great quote from Drucker on the culture eats strategy for breakfast. And I often say that that is very true. And any initiative that you have becomes just a side dish. And you talked about so many technological initiatives here. Tell us a little bit about your experience. I mean, you're a true practitioner of this, and from a cultural perspective, as you're implementing so many of these changes in the financial sector, what do you see out there in terms of addressing culture, and what would be your suggestion or for organizations that are implementing some of these changes in terms of successful approaches to addressing the cultural aspect of this change?
Well, I mean, marrying it, I mean, the first thing and reaction that comes to mind and marrying it to technology, culture and technology, it's all about the data. Okay, data in institutions and enterprises is buried in silos. People get very, very protective of it. Their performance is tied to it. Their revenue and profit is tied to it. But what I've seen throughout my career is wherever there is an opening of the data and sharing of the data more horizontally across business units, okay, for greater gleaning of insights, okay, that everybody benefits from, okay, that is a key input into some culture or change management that I've seen in my career. Okay, and sometimes it takes along those lines a mandate that's compliance driven to drive that cultural change through the organization. So I've done a number of Basel II implementations for banks, okay, and a mandate coming down from above that says we're going to put Basel in, and that will open up data sharing because people have to have greater insights in terms of credit, market, and operational risk across the institution. Well, then all of a sudden light bulbs start going off and culture changes a bit. So.
Yeah, for sure. Another question that has come up throughout was related to what changes have you experienced with the pandemic? I mean, this field is accelerating at its natural pace, which is pretty fast, and then the pandemic happened. What major shifts may have you observed as a result of the pandemic?
Well, for us, it's accelerated, and for me, it's validated what I laid down when I first came on board here in 2016. I immediately saw in our company the power that we have a smartphone that's number 2 and number 1 in the world based on any given month in terms of volume. We have AI system on a chip, okay, and all of that power in your hand for financial services, okay. And I've been saying we need to move more horizontally in terms of our strategy, okay, in terms of a platform or basket of what we can provide. Well, all of that technology powering mobile financial services on demand for any place, anytime, anywhere. And then boom, the pandemic hits and it's like everybody's locked up.
Yeah.
And how are they making transactions happen? Well, from their mobile device. So it was almost like a self-validating strategy that's kind of played out very, very well in our favor. Okay. And to a certain degree also, you know, in other, I don't want to get into global politics and you know, US China, but in that respect as well too, you know, in trade war, people still need to lead their lives. Okay, they still need to buy goods, pay for stuff, and live. Okay, and it's all through their mobile devices and internet connections. So
Absolutely. I have a question here from, let me cycle back to the question from Antonio Urquiza. And Antonio asks, hello, Bill, interesting perspective on the evolution of banking. His question is, which regulatory changes are required in order to realize to a greater extension this vision of ubiquitous banking? What do you see in the regulatory space that needs to be adjusted for ubiquitous banking to become a reality?
yeah, and that's a great question, and that is the bottleneck, and that's preventing players that are scaling enormously, for example, in China, Ant Financial, Tencent, to moving into the West, as an example. Or another example, telco banks or payment providers moving into emerging markets and wanting to get into deposits and credit and lending. Okay, it's a very fine line in many countries where you start to move into other services, especially when you move into deposits and you're holding people's money, okay, in your institution. Well, that typically triggers a regulator to say, well, hold on, no, wait a minute, you're not a telco anymore. You're not just enabling payments, or you're not just enabling credit and lending just per se, but you're actually storing and protecting people's financial assets. You need to open up a bank license or charter. Well, it's a different dynamic and different game then. So for it to become fully ubiquitous and continue to cross across industry boundaries, we're going to have some cross industry standards put in place, okay, in terms of specifically that last bastion, okay, that I mentioned of financial asset protection. I see it further loosening up with payments and credit and lending the regulators haven't given in yet in terms of asset protection. When you're playing with people's financial livelihoods, not everybody can hold deposits. So
Yeah, that's definitely a great challenge, and then to get that that collaboration cross country and on those standards, it can become quite a challenge. The next question here comes from Aklak Khan, and he makes a comment on that. It's interesting to see new players coming into e-banking, and are there efforts going on to connect regional banking and global banking? And specifically, what is the banking industry doing to counter these new players? So some of the more established players, what is that they're doing to kind of like, keep these new entrants at bay? Are there strategies that you see out there where the incumbents are trying to position themselves in a way and protect their turfs? Is there even effective these days?
well, I mean, back to that chart that I had that kind of show the distribution between fintechs and big techs versus traditional. Okay, and what transactions or services the incumbents are keeping versus the fintechs. Okay, and the heavy volume institutional banking, transaction banking, mortgages, to some extent, are still being kept in the incumbents world. Okay, where other services that are more commoditized, okay, and deposits are starting to become a bit commoditized. Okay, but the problem with the e-banks or the virtual banks, the challenger banks, yeah, just because you get deposit share and you start signing up customers doesn't mean you're profitable. So invariably, they need to come up with new business models, quote unquote, new gimmicks, or start to try to move into what the incumbents are offering, where they're making large amounts of revenue and profit, but that's more heavy duty global transactional volume and fees associated with it that the new banks they're just not there yet. Okay, they can't tackle that. So that's a quandary. Okay, so yes, COVID-19 contextually as another example is spurring on a lot of people to go to new challenger internet banks because it's quicker to launch an account, get money, and start paying for stuff that you need versus going down to a traditional bank branch and opening up a new account, so on and so forth. But then they have other problems. They have infrastructure stability problems. The new banks, the challenger banks, can they scale? I mean, the traditional players have mainframes that pump thousands of lines of code in support of transaction global volumes. So there's a number of dynamics at play. Okay, so I don't see the challenger banks disrupting the traditional industry and taking it over, but they're certainly becoming more suitable in many cases as provided by this crisis we're through. So.
Bill, thank you so much for sharing what's really a masterclass on the state of banking and financial services and technology. Incredible depth and very interesting insights. We really appreciate you taking the time. It's real late there in China right now, and you're here with us. That's really appreciated.
No problem. I enjoyed it, and thanks for having me. Thank you.
Thank you very much. Ladies and gentlemen, this wraps up this segment of Financial Services Live. At the top of the hour, we're going to have Elizabeth Turner joining us to discuss project management best practices related to financial services and certainly deployments of technology and many of the topics that Bill discussed with us. So as you exit the session, there will be a pop-up that you can fill out a survey with respect to feedback to this session and any other sessions we have in the next few days. And I look forward to, we're going to close the session and we're going to restart at the top of the hour. So we look forward to seeing you there. Bye-bye.